In 2026, it looks like HMRC are going to be coming after more people than ever before, and not just the wealthy. If you're planning retirement and trying to squeeze extra income from a side hustle, rental properties, or freelance work to boost your pension pot, or if you're planning to use that extra income after you retire to make your pension last a bit longer, HMRC is about to make your life significantly harder. And they're starting in April 2026. I'll be giving you 4 actionable steps that will reduce the chances of you getting burnt by the ever-extending arm of the taxman. Before we dive into the detail, go ahead and gently tap that subscribe button. The UK retirement landscape changes fast. From pensions and tax policy to property market news, Retirement Brief UK tracks and summarizes the news impacting your future. Here's what's happening. HMRC is rolling out Making Tax Digital for income tax, which means quarterly filings instead of a single annual return. They're expanding their Connect AI system, which now processes over 100 billion data points a year, automatically pulling information from eBay, Amazon, Airbnb, your bank, crypto exchanges. And they're sending millions of nudge letters to ordinary people, flagging supposed tax issues that often aren't actually issues at all. The result? More admin, more penalties, more stress. And crucially, if you get this wrong, you could lose thousands in fines that wipe out the extra income you've worked so hard to build up. The people getting caught aren't ultra-wealthy tax evaders. They're people like you, making honest mistakes or not understanding new rules that didn't exist last year. I'm going to walk you through exactly what's changing and what you need to do right now to protect your retirement plans. Let me be blunt. You are not being audited by a human reviewing your paperwork. You're being analyzed by an AI system that never sleeps, never forgets, and matches your data across dozens of sources simultaneously. The HMRC Connect system processes over 100 billion data points a year. It brought in £4.6 billion of additional tax in 2024 to 2025 alone. And here's the crucial bit. It's now pulling data from every platform you use, every eBay sale, every Airbnb booking, every Amazon FBA listing, every bank transfer, every crypto transaction. Companies House reports your director status. Credit agencies track your spending patterns. Then the algorithm matches all of this against your tax return looking for mismatches. Here's a real example that affects people in your situation. A 58-year-old woman started renting her spare room on Airbnb for £15,000 a year to top up her pension. She didn't declare it because she thought it was too small to matter and didn't understand the rules. Connect matched her Airbnb listings to her bank deposits, flagged it automatically, and she got a letter. She ended up owing £3,500 plus a £500 penalty, money directly stolen from her retirement plans. Or take a 55-year-old starting a side business selling online. He made £12,000 profit in year 1. The system flagged his marketplace transactions against his bank account and noticed the deposits didn't match his tax return. Investigation launched. Admin nightmare. Months of stress. This isn't human judgment. This isn't someone weighing up whether you're being deliberately evasive. The algorithm doesn't know intent. It sees a mismatch and flags it. That's how it works. HMRC sends what they call nudge letters, officially called one-to-many letters. In 2023 to 2024, they sent 6 million of these. They recovered £448 million from people's bank accounts. Here's what makes them so dangerous for someone in your situation. The letter doesn't tell you what HMRC thinks is wrong. It just implies wrongdoing and puts the burden entirely on you to figure it out. You get 30 days to respond. If you don't, it escalates to a proper investigation. The campaigns have targeted exactly what you're doing. Undeclared rental income, freelance work not on your tax return, marketplace sales, director loans, side gig money. The letters are polite but threatening. We think you owe us money. Please review your tax position. Here's the killer part. Many people getting these letters haven't actually done anything wrong. The Connect system has flagged something that looks suspicious but isn't. You received an inheritance and didn't declare it properly. Your partner's income got mixed up with yours in the data. You have genuine relief that the algorithm didn't account for. Doesn't matter. You're flagged. You get the letter. You're now stressed and spending money on a tax advisor to prove your innocence. And if you ignore it, HMRC escalates to a compliance check. That's when the real admin burden starts. This is where everything changes for people trying to build extra income in retirement. From April 6th, 2026, if you're self-employed or a landlord with more than £50,000 annual income, you're mandated into Making Tax Digital. From April 2027, that drops to £30,000. From April 2028, it goes to £20,000. Here's what it means for your side income. You can't use a spreadsheet anymore. You can't use a shoebox of receipts. You have to use HMRC-approved digital software. You have to keep everything digitally. And instead of filing once a year, you're filing quarterly. 4 filing deadlines a year on the 7th of August, November, February, and May. Every single year. Now here's the penalty part that really stings. Late filing gets you points. 4 points triggers a £200 fine. Every late filing after that adds another £200. You're filing 4 times a year, which means 4 times a year you could slip up. 1 missed deadline in August, 1 in November, 1 in February, and suddenly you've got £600 in penalties that you didn't expect. That's money coming straight out of your pension pot. If you miss the submission format, getting it slightly wrong, or file a day late, maybe you use the wrong software, or submit records in a way they do not permit. All of these can trigger penalties, and multiple times per year. For someone trying to build a side income to extend their retirement, this is the real risk. Not tax evasion, not deliberate fraud. Simple admin mistakes that now come with automatic financial punishment. Here's what frustrates many people. The tax burden is shifting from people who can afford to bear it to people like you who can barely manage it. The ultra-wealthy? They can restructure their affairs, hire expensive advisors, relocate if needed. Policies that were supposed to hit them hard get quietly watered down. The exit tax that was meant to trap people leaving the country? Scrapped. Proposals that threatened the rich? They disappear or get delayed. Meanwhile, policies that actually stick around hit ordinary earners hard. National insurance thresholds got cut. Pension contribution limits came down. And now, compliance enforcement is being redesigned to catch millions of small earners. HMRC has over 500 new compliance officers hired, with plans for 5,500 total by 2029 to 30. But they're not investigating corporate structures or offshore trusts. They're investigating people exactly like you with marketplace income, rental properties, freelance work, side gigs, people trying to pad their pension before retirement or extend it after. The tax gap, the difference between what should be collected and what is collected, is £46.8 billion. Error and carelessness account for roughly £21 billion of that. That's honest mistakes and misunderstandings. Yet the HMRC penalties don't distinguish between fraud and incompetence. You get the same fine either way. You have 6 months to get ahead of this. If you're earning £50,000 or more from self-employment or rental income, you're in scope for April 2026. If you're close to that threshold, get your records sorted now. First, get into digital accounting software immediately, not next month, now. Cloud-based, HMRC approved, integrated with your bank. Start building the habit now so that by April 2026, filing quarterly is automatic, not chaotic. Use it this tax year to learn how it works. Second, understand your allowable expenses properly. This is where people get destroyed. You don't know what can be written off. You're either claiming things you shouldn't or missing things you should. Get proper tax advice on this before April 2026. A 2-hour consultation now could save you thousands in penalties and investigation costs later. Third, if you receive a nudge letter, don't panic, but don't ignore it. Review your position honestly. If you've made an error, address it. If you believe the letter is incorrect, Respond with clear evidence explaining why. Ignoring it escalates to investigations, and investigations are expensive. Fourth, get a tax advisor. Not because you're doing anything wrong, but as insurance. Someone who understands the new rules, who knows your situation, who can keep you compliant. At your age, with retirement planning on the line, having someone in your corner is worth the cost. The system is changing fundamentally. HMRC has invested billions in technology and enforcement. Making tax digital for income tax starts April 6, 2026. The Connect system is getting smarter, penalties are getting higher, and they're coming for ordinary earners, not billionaires. But here's the good news. If you get ahead of this now, if you get your records clean and your understanding clear, you'll be fine. Compliance isn't complicated. It's just unforgiving of mistakes and procrastination. If you're running a side business, managing rental properties, or planning to use extra income in retirement, what's your biggest worry about these changes? Do you think HMRC and the government are going after the wrong people? Or do you think this is just bringing fair tax treatment to the masses? Do we all just need to get used to the modernization of the tax machine? Let us know what you think in the comments below. If you found this breakdown helpful, don't forget to hit that like button and subscribe to Retirement Brief UK for more essential updates on the UK retirement landscape. We cover everything from changes to the property market, summarising news on legislation changes and market trends to practical advice for homeowners and investors. Ring the notification bell so you never miss an update that could affect your retirement planning decisions. Thanks for watching, and we'll see you in the next one.